Good morning. This is George Kachuk of RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, it's pretty quiet here down on the floor this morning in observance of Columbus Day. The bond markets are closed. However, the equity markets continue to tumble, and the equity markets are in a continued downtrend. Okay, so hopefully at this point you've raised a little bit of cash, and even for the longer term trader, you want to take a look at some of your positions, and if they're falling apart, you might want to consider raising some cash. You know, last week we talked about a follow-through day, looking for a follow-through day. Looked like the market might have bottomed. Wednesday, a really nice rally last week. However, the market just pretty much imploded on Thursday and Friday. Friday, the markets were led to the downside with the semiconductor stocks, and then pretty much spread across all other sectors. So really bad downtrend. Volume picked up. So we had a lot of these high volume days going to the downside. No telling where this is going to stop at this point. Now the S&P looked like it was trying to hold support right about that 1900 level. Now if the S&P can't hold that level today, pretty good shot that it's going to go down to 1850 and then might even test the April lows right about 1814. Now we already undercut our August lows, so that kind of tells you the severity of this call it correction or downtrend. Now NASDAQ too couldn't hold that 4371, that was an important level. Friday closed below its 200-day moving average, right about the 4,300 level. And now this morning we're down off maybe another 4,850 points. So now NASDAQ, if it can't stay around here, 4,250, it might very well go back down to the April lows of about 4,000, a little bit below that. So those are the eyes that keep the levels I keep my eyes on. Now, there's no time to be going long any equities. Again, raising cash, but again, paying attention, creating watch lists of stocks that are holding up pretty well. Now, coming into this week, the biotech and drug stocks were still holding up pretty well, but of course, when the market's correct, they start taking everybody down with it. So we have a few pockets of some industry groups doing okay, but that's around a relative basis. So again, those are the eyes you want to keep your eyes on. So, as always, let price and volume be your guide. Be careful out there. Continue to look for a possible bottoming day. We don't know when that'll happen, but right now the trend is to the downside and it could continue for some time. You can take your excuse, whether it's European recession, the end of QE, Ebola, doesn't really matter. The most important thing is to realize that the market's taking hard hits, institutional investors are dumping shares, so just be cautious. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago.